What's up guys, it's Matt. So in this video I wanted to talk about why you need to follow your trading plan even if you feel uncomfortable. So I'm going to give some examples of when this could likely occur and why this is something that you need to pay attention to, because otherwise this can develop into a bad habit. So before I continue, if you'd like to see more videos like these in the future, just be sure to drop a like and subscribe. And if you're interested, I have links down in the description to my trading community, or where you can gain access to even more trading guidance in the elite community. But anyways, let's continue. So if we take a basic example of a trader that backtested a strategy a total of 200 times. So they took 200 trades in total, and they found that based off of 200 trades that they took, so I'll put the T here to represent trades, let's assume that they ended up having 150 wins, and they also had 50 losses. So based off of this shows us that from a sample size of 200 trades in total, they had an average win percentage of 75%, right? So 150 wins out of 200 losses. I'm not taking into account break evens. This in itself shows us that their win percentage is 75%. Now, obviously, if you increase your sample size, so let's say you increase from 200 trades into maybe 1,000 trades, then obviously your data that you use is going to be even more reliable, especially if the data is more recent, because now you'll have a more accurate average of what your true winning percentage is. And let's also assume that based off of all these trades that they took, they had a 1-to-1 risk to reward ratio, meaning that how much they risked compared to how much they won was about the same. So their stop loss was pretty much the same as their take profit. So this is basically their trading strategy. Okay, so they did the back testing, they found out that this is a strategy that they want to follow. And now if we continue, remember that they have a 75% win percentage. Let me change the color. Let's assume that a couple of days go by. So this is just an example. This is obviously knowledge that they're not aware of just yet. So you and me know this, but they don't. And so now let's say that they follow their strategy, which could be as simple as buying or selling at a certain zone. It can involve trading supply and demand, using trend lines, different oscillators, whatever their trading strategy was. Let's just, for the sake of argument, keep this simple. They had 3 different setups throughout that day that presented themselves as opportunities in order to take a trade that follows their trading plan, meaning that based off of what they backtested, they got a signal to enter a trade, whether it was a position to go long or to go short. Ignore the fact that this is a bullish trend. This is just an example, but let's say they had a total of 3 setups where they could have taken a trade. And out of this, let's say that they were feeling pretty uncomfortable, to say the least. So let's say that previously, based off of a previous strategy, they have encountered a losing streak, or they might have blown their accounts. So out of these 3 setups, let's say that they only take one of them, and the third setup ends up being a winner. But let's also assume that the first 2 were also winners. So you have 3 potential winners, but keep in mind that they only took one of them. So they could have had 3 out of 3 potential winners, but since they only took one trade, then this only counts for 1 winner. And so now let's move on to the next day. Let's say that on the next day, they had 3 more setups that presented themselves. And so because the last setup that they took from the previous day, because it was a winner, they were probably feeling confident this time. And so they took it. And now let's say this one was a loser. And so now they're feeling a bit uncomfortable having taken this loss. And so now let's say when the next setup presents itself, let's say that this is a setup that ends up being a winner, but they don't take it. They don't take it due to the fear of encountering another loss. And let's say the next one goes by, and once again, they don't take it because it could have potentially been a loss. And this one, once again, turns out to be a winner. So we had a total of 3 potential setups where they could have taken this trade. They only took one of these setups, and the one that they took ended up being a winner. Based off of the past 2 days, right, they had a total of 6 different setups. They only took 2 out of the 6 setups that they had, and they're basically break even because they won one trade and they're down another trade. Okay, and so now let's say the next day goes by, and at this point they regret not having taken these 2 trades again. So when the first setup presents itself, they end up taking it. This setup ends up being a winner and they're happy. Okay, and then the next setup presents itself, but this time they're starting to once again feel uncomfortable. And so they tell themselves, okay, this might not be a winner. This might actually be the one that's a loser. But of course, this is the one that ends up being a winner. So now they're even more frustrated. Let's say 2 more setups present themselves. One of them ends up being a loser. So one of the setups is a loss, and then one of them is a win. And once again, they only took one of these trades. So if you're following along, right, these past 3 days gave us a total of 10 potential setups. But this trader, based off of feeling uncomfortable, they only ended up taking 3 out of the potential trades. And although technically they are up in profits, right, because they had 2 winners and they had 1 loser. So these were our 2 winners. This was our loser. In the end, again, they ended up only taking 3 out of 10 trades in total. And so the issue here is that if you're missing out on certain trades due to feeling uncomfortable, sometimes what will occur is these trades that you didn't end up taking. So let me choose the color purple. So these trades that they didn't take now affect their long-term win percentage, right? Because had they taken all of these setups, so there is a total of 10 setups, only 2 of them were losses. They could have ended up, instead of having 2 winners, they could have ended up having 8 winners. So their potential wins could have equated to 8 wins in total, right? Because we had 10 setups, 8 of them were winners, but they only took 2. So this is where they only ended up having 2 wins, but they could have finished with a total of 8 wins. And so this is the issue where this doesn't seem like a big deal out of a series of 10 trades. But if you replicate this long enough, and so now let's say that for the next 100 setups that present themselves, okay, so 100 potential trades in total, they end up taking 50 of them. And out of the 50 trades that they end up taking, let's assume they have a 50% win percentage. Okay, and so now we can see how having a 50% win percentage is pretty far away from a 75% win percentage. But let's assume that the other 50 trades that they didn't take, let's say majority of them were potential winners. And so this is the issue now, where in the long term, your probable edge does get affected if you don't follow your trading plan, which requires you to take trades, even if you're feeling uncomfortable or fearful or simply feeling uneasy. In these examples, this would have been a good example where obviously taking these trades would have given you some winners. You might have another scenario where you have 3 potential setups in a single day. You take all of them and they end up being losses. So this is where you might tell yourself, well, okay, had I not taken these setups, if I didn't take them, I would have avoided these losses. I wouldn't have encountered the loss. And so my argument here is to not say that sometimes when you do follow your trading plan, you won't experience probable losses, because you will. And obviously losing in itself, I'm not going to pretend is a good thing. But if this follows your trading plan where you had 3 potential setups to take and you took them and they simply played out as probable losses, well, at the very least, you followed your trading plan, because the next time around, right, let's say you have 3 more setups. If you continually follow your trading plan, which is based off of something that you've back tested, those 3 setups could be the winners that put you back up in profit, which is why you shouldn't focus too much on whether or not you're right or whether or not you're wrong. So typically what happens is a trader will wait to see if a setup plays out, and if it plays out as being a winner and they didn't take it, then they'll reinforce a bad habit that it's okay to not follow your trading plan because at least they saw the setup play out. But that's not the right thing to do, because if you get in the habit of avoiding taking probable setups that you should be taking that follow your plan, well then, like I said before, these setups that you don't take could be the winners that end up improving your overall long-term edge. So don't worry too much about taking a setup that ends up being a loss if it follows your plan, because you're following your plan. That's a good thing in itself. So don't focus too much on simply being right or wrong. Focus more on following your plan. So this in itself, long-term wise, is the key to success. And this is how you can develop a good habit and think in terms of probability. So that way you're not getting in the habit where you have 5 potential setups you only take one of them and then the other four end up being winners, and then you regret not having taken the other four, which could have improved your overall performance for the day or for the week or for the month, right? So it's super easy to look back and to say, well, you should have taken these trades. But when you're trading the markets live, sometimes you'll talk yourself out of a setup because you feel uncomfortable or because you previously took a loss, despite the fact that it follows your plan. So this is why you need to follow your plan despite how you feel, because if you don't, then this will affect your long-term probable odds. And I understand that this was a very simple example here, so this can be even more complex, and what your trading plan is could simply be a total of maybe 5 different rules. If you want to be more advanced, it could be 10 rules, but you do get your trading plan simply from back testing if each strategy gives you an edge. So if you do the back testing, you look at the data, you see that long-term wise, it gives you that probable edge. So let's say you back test 200 trades or 500 trades, you find that it gives you a good win percentage, or maybe the win percentage is lower than 75%, but your risk to reward ratio is greater. So it might be a 1-to-3 or greater, then that's great, as long as you follow it. Because again, if you don't follow it, you could be missing out on some potential winners. So it's not about being right or wrong, it's about following your plan. So I hope you enjoyed this video. Let me know your thoughts down in the comment section below, and I will speak to you next time.